Good job. Good timing.
Because they want to stabilize the market pool over the A share.
By international comparison, I think this is not over tough.
One possible reason is that by putting this penalty out at this time and asking these people to sell their stocks, it's a good time to protect them.
I don't think that this special development will have a big impact, especially on the US market.
We tightened the regulation just to protect more of those investors and also gave people more choices in a more legitimate way. I think that's the balanced approach.
The Chat Lounge. Chat Lounge.
Chat Lounge.
The Chat Lounge unpacks views and opinions on hot issues in a more casual way.
Welcome to the Chat Lounge. I'm Tuyun. Join me for a chat on China's latest move to tighten its crackdown on illegal cross-border brokerage activities. Professor Hans-Peter Burghof, the chair of the Banking and Finance Department, University of Hohenheim in Stuttgart, Germany. Professor Liu Baocheng, the director of the Center for International Business Ethics, University of International Business and Economics in Beijing, and Chen Jiahe, the chief investment officer of the Beijing-based Novem Arcae Technologies. Great to have you all back on the show, gentlemen. So China's securities regulator has launched sweeping investigations into Tiger Brokers, Futsu Securities International, and Longbridge Hong Kong for illegally conducting cross-border securities business. Authorities are proposing massive fines and the confiscation of illegal gains. Jiahe, you're on the front line of financial investment, so can you try to explain in layman's terms what these firms did that finally pushed the regulators to act?
Well, this is basically a very simple sign that if you are doing a securities business in China, that includes quite a lot of different types of special businesses that are classified as securities service. If you do this kind of business in China, you can't just jump in and say, okay, I'm going to do it. What you have to do is that you have to apply the license. And then when you get the license, you can do the business. This actually works in many, many countries around the world. For example, if you want to open a bank in the United States, or you want to open a securities company in Japan, or if you're going to open a university in Europe, you have to apply for the license for many special services. This includes quite many different types of businesses, such as asset management, asking people to open accounts, doing IPOs, these kind of investment banking things, all sorts of things. But altogether, you have to apply for the license. And for quite a long while, these companies were doing these businesses in China, and they didn't apply for the license in China's economic border. They are not even, some of them are not even registered in China as companies, just to employ people and asking them to do advertisement to clients and ask them to open the securities accounts. It's that online opening. People don't really have to go to their offices around the world. It's kind of an illegal securities activity in China. If you read through all the securities laws in China, you know it's illegal.
But reports say this follows nearly 5 years of regulatory scrutiny and behind-the-scenes battles. So, Baocheng, why did authorities wait this long?
Yes, I think the regulators have noticed the increasing capital flow that really risks the financial stability, which is really the key concern of the Chinese government. And now there is a quite gap in the Chinese jurisdiction versus the overseas jurisdiction. And also there's a large existing gap within the potential gains, either in terms of the interest rate or other type of returns between China versus the overseas. So the regulators really seeing that it is getting a massive disruption over the Chinese channel of security distribution. And technically, of course, by opening offshore trading account, escaping the mainland government jurisdiction is something that's not really tolerated. So in this case, they rely on the affiliated mainland entities or online overboarding pathways that really blurs the boundary. So in short, they cannot really tolerate anymore. Regulators, they really have moved from the previous containment now to a systematic closure with heavy-handed crackdowns.
But is it like that if you're useful for us, I'll just let it go, and even if you operate in the Great Zone, But if we decide that you are no more useful, and then
I think I think you really pinpoint a very delicate question, but a very subtle one, because the Chinese, the reform and open door process is really pioneered by those practitioners who really moved into the gray zone. There was no yes or no. And then if they are doing good to the economy or to the people's livelihood, and then they will retrospectively rectified. But if they are doing something that really against the direction of Chinese reform, they will have to be eliminated. And so therefore, it is always the case that a regulation will and has to really come after some existing practices, and they ponder over and make the cost and benefit, the assessment over social, economic, and financial impact, and then they will decide what to do. So therefore, you may accuse these people as speculators or opportunists, but many of those pioneers in many other fronts have really succeeded as heroes. So that's the case in China.
Okay, thanks. And Hans-Peter, I'm not sure how common such illegal activities are in other markets like Germany, but do you think Beijing's response is rational, and why do you think regulators have moved so aggressively at this point?
Well, first, let me say something about other countries. In most countries of the world, this is a highly regulated market, and doing business without license is forbidden. In Germany as well. For sure, doing business and finance is a dangerous market, and you have to have these licenses, no doubt about that. On the other hand, what we do, for example, in Germany, we create sandboxes. So we let pioneers try something. Yeah? And now the question is, how far is this sandbox open to activities? How far are you allowed to go? And maybe there's even a difference in the opinion on how big the sandbox is you can play in. Because the people who act on this and say, if the state doesn't react, seemingly, he believes we're still the sandbox. We're still allowed to play and try things. And for sure, there is an inherent economic interest in giving investors access to foreign markets, to allow them better to diversify international, to allow them to have a better financial management. This is an increase in the freedom of investors. There's an increase in the efficiency of portfolios if you allow for that. So there are good reasons to have a sandbox here. There might have been a fundamental misunderstanding about how big the sandbox is people are allowed to act in. And now the state says, listen, we don't like it anymore. Now we close the sandbox totally. And some people in this market might say, oh, this is a bit unfair. First you let us play for 5 years, and now you close the sandbox and say we are criminals. So you see, we get into some gray zones. If we want to allow for innovation, we must give people freedom to innovate. And I think in China, there has been a big degree of freedom in this respect in the past. Now they're closing down. I think in this process of closing down, they don't get too legalistic nonetheless. As far as I wrote, they say it's no longer allowed. We wind down these activities. If we can talk about how many financial penalties we might have in this process, but it's a normal thing. If you wind down, say this is also illegal, you must have some certain consequences. But in the long run, maybe it would be good if law would follow a little bit of economic reasoning that was behind this development and make it possible for Chinese investors to be internationally active, even private investors. Otherwise, you must somehow fake this aspect by derivatives and things like that, but then all the risk stays within China, which also maybe not too good. So I think, yes, you have to have a license, and the state must make clear how far this license goes. If you wait 5 years, I'm not sure if you perfectly fulfill this task.
Then what's the biggest driving force?
Well, I think what drove them into action was the outflow of capital. I'm very much aware of that. Here, a liberal might also say, stay competitive and the capital will flow in. And stay competitive is a very, very complex task for any country because it has to do something with the economic opportunity, but it also has to do something being attractive for innovators, being attractive for intelligent people, having an environment where people want to make their business. All this combines to being attractive for people and capital because capital follows people and vice versa. So this is a task of the state. And if you say we just close the borders and don't let capital flow out, this looks to me like a very, how should I say, defensive strategy. You're going on the defense if you do this. Whereas China in the past has been very aggressive in a positive sense by saying, okay, we are attractive for the world, and we are able to compete.
All right. But some people would say it is the domestic or the mainland's Asia market, which is supposed to go up. But in reality, it turns out to be disappointing every time. Is that so, Jiahe?
Well, if we look at Asia markets, it's been growing quite a lot in the long term. I mean, if you look at Shanghai Composite Index, it started from 100 points back about 35 years ago. Now the point is about 4,000. So you can see this market has been increased by 40 times over less than 4 decades. So if you compare this increment with countries like United States, it's not a bad performance, actually. Why people are having so much complaints about their investments in many cases that if you talk to quite many people, they always say, okay, we're not having quite a good performance. I think there are two reasons. The first is that because China is a developing economy and our economy is less matured compared with many other mature economies around the world, like the capital market in Europe, the capital market in Japan, we are less developed. So that means although with the same or even better performance over the long term, what we're actually having is we're having much more fluctuations. So if you choose the wrong time to enter the market, you can suffer less if you are investing in Japan because there is not so much fluctuation. So if you pick the wrong time, you're suffering less. But if you pick the wrong time in China, because of the fluctuation, you're going to lose more money. But if you pick the right time, that also means you're going to gain more money because the fluctuation is actually larger. And the second reason is going to the nature of media, is that when people make quite much money, they don't really like to jump onto the TV and tell people, okay, we make like 30% this year, we made about 40% last year. We're super rich, we don't work anymore. So you basically don't say that. Probably one of the biggest exceptions in this world is Warren Buffett. He kept on telling people how much money he has made. But most of the people just remain silent if they have got quite a lot of money. But the people who have lost would go out and keep on saying, okay, we lost the money. And they feel they don't really have much things to lose. And they won't be jealous by their friends and relatives because they have lost the money. So when you go to the marketplace and you talk to people, you've got much more voices about losing money rather than gaining money in many cases. So that's a very interesting phenomenon.
Might I confirm first your cultural statement, except very good friends who tell you even if they lost money. Around me, there are always people who made a lot of money on the capital market. If they tell you about the investments, they always say a positive thing. They don't hide this. So even in Germany, which is comparatively conservative, you've got this phenomena that they talk about success. If that's not the case in China, then that might be a wrong impression. And the other point, what you said, is very interesting. The point is, if China has such a strongly fluctuating market, the value of international diversification is extremely high for investors. And this shows why there is such a pressure to open up and make it directly accessible to the investors to go into foreign markets via the respective means.
Well, I just wish to answer the first question because I got a pretty clear answer for that. And I think it's a very interesting question because in many cases, when you talk to friends, yes, you do hear that if they get money and they will say, okay, I made money. And if they lost something, they just kept silence. That's very true. And that happens when you're talking to people privately, in most cases, what I've personally found. But the thing is that when you're going onto the internet, you find the situation to be, well, exactly vice versa, that when people make money, they just kept silent. And when they lost the money, they were kept on complaining. Because the internet, which is where most of people are getting their information today, is a place that you're actually talking to people you don't know. You don't know, are there criminals? Are there any, because when you talk to your friends, you know that they're trustworthy. So you'd be happy to share what you have made. But when you're talking on internet, when you're talking on, posting some things on these kind of platforms, online platforms, what you would do is that you just, if you made quite a lot of money, you keep silent because it's a place you're talking to strangers. So when we get information from internet, we get much more people complaining that they're losing money.
Baocheng, your evaluation here?
Well, it is true that people's confidence in the Chinese stock performance is not there yet. And yes, there are people who make huge amount of money, but still, the stock exchange is really a wealth polarization process. And that's why I do not really touch upon it for my whole life. And the other is that I think it's rational enough for some people who can really diversify their investment portfolio, both in China and across the world. And also, they do not really know when China can really liberalize the capital account, when can really loosen the control on foreign exchanges, because last year China made a record high of foreign exchange in its trade surplus, and that might be some sort of expectation that, okay, we're going to, at least, allow a marginal liberalization. And so, people really place a bet on it. And also there have been successful examples by doing that. Look at Alibaba and many other digital platforms. They register as a verified or variable the interest entities in Bermuda or in the Cayman Island and Belize, etc. And then they raised the huge amount of fund, and then they come back and make their businesses far more success. And many of those actually unicorns are created by playing in this ambiguous ways. But right now, it is the regulators who are really getting tough on this. One is that they want to stabilize the market pool over the A-share because this is really becoming a political task by those regulators. So therefore, they need to keep the pool of money full. The other is that there has been a huge campaign to boost domestic consumption. They also wanted to keep the money here within the Chinese marketplace. And then the issue lies in that those many savvy youngsters who made money even out of the Chinese stock exchanges, and particularly those fintech savvy people, they really wanted to diversify. But another worry by the Chinese regulators is that because of the digital transformation is so much so accelerating, so people just click a button and also they can play with their money. So that's also something that raised the concern of the regulators. Of course, there are also a lot of misbehaviors, malpractices going on, and just because there has been a lot more green zones, particularly in the enforcement area. Therefore, people have been really pushing the envelope until it breaks. So now the heavy-handed crackdown.
And some are arguing that it's not just about capital outflows or financial securities. It's also about the data control. The crackdown was not carried out just by the securities regulator. The country's central bank and several other agencies also joined the campaign. Is that so, Baocheng?
Yes, I think technically they are violating the Chinese regulation without the legitimate license. Strategically, they disturb the financial market stability, which is the key focus. And third is that there have been data flow, and of course they also break the firewall. And now more of those, particularly in the investment, have been flown into those high-tech areas. So that's something very sensitive. So it's a whole combination of many concerns that really brings to such a situation here.
This has been the Chat Lounge. Check out the impact of the move when we come back. Stay tuned.
Sideline Story brings you all things sports related. The hottest topics, latest events, juiciest stories, all with a very personal take. Subscribe to Sideline Story Podcast for heated sports discussions covering events that are happening in China and around the world.
Welcome back to the Chat Lounge. Let's continue our chat on China's latest move to tighten its crackdown on illegal cross-border brokerage activities. Let's turn to the impact. The penalties are enormous, actually. Regulators plan to confiscate all illegal gains and impose fines totaling more than 2.2 billion yuan, or over 320 million US dollars. And it marks one of the toughest enforcement actions in China's financial sector in years. Then, Jiahe, how damaging could this be for the companies involved?
Well, this is a very good question because we haven't got too much details at the moment about how much penalties they are going to receive. The message from the CSRC, China Securities Regulatory Committee, said that they are going to receive the penalty that will be very serious, but we not yet know how much money that will be. So if we look at the stock performance in the first day, it dropped by about 1/3 for these companies who get the fines. And the second day, they rebounded quite a bit back because there is also a legal concern is that because there are not quite many of these companies, if they have a lot of their financial assets not really in the economic border of China, can China's fines from CSRC really be conducted? And if they don't comply, what will be the result? So there will be quite a lot of questions to be asked about how much penalty there will be exactly, because that really it's really a big issue concerning quite a huge amount of customers, and it's the first law case that we have ever had in China like this one, and there will be quite a lot of businesses to do with conducting all these penalties. So yeah, we're just waiting to see what will the final outcome become.
All right.
But I think one major consideration is that how they can really, with this heavy-handed crackdown, with all the big fines, they need to take into one major consideration how those, the individual investors are being affected, because that involves a large amount of audience, which is also a concern for social stability, just as we have done in the crackdown of many of the P2P type of credit or security companies, etc. So those people are really either ignorant or out of their greed, but largely they have been innocent. But if these companies are being cracked down or put into default, and how those individual investors can be taken into consideration so that we can really prevent a domino effect. So this is need to be brought into the sight of those regulators.
Right. Maybe that's why regulators gave these firms a 2-year rectification period instead of an immediate shutdown of those.
That's quite a good approach.
Right. And Hans-Peter, you were saying?
Yeah, I was just saying two things about that. First one is, if you're an investor and invest with a company without license, and this company has no license, I don't know how innocent you really are. That's the first question. I might have, but I don't know the details in this respect. And secondly, by international comparison, I think this is not over tough. If you look at what the United States sometimes does, they have very, very high fines, which often threaten even the existence of large global banks.
Okay.
They go much further, and that is kind of, I should say, secondary income they have there, where they try to get high fines from companies, from banks, from other companies. So it is not over tough in this respect, at least.
Okay.
But after my understanding, the U.S. practice is that after they have either confiscated assets or offer a big fine, they will also, make sure that they compensate those innocent players that are being victimized by some malpractices, which is not really much of the case in China.
What's going to happen in China?
Well, it's now, go to the government coffer as a contribution to the fiscal budget.
Yeah, but especially in maldoings in the area of finance, much of these fines in the United States, billions and billions in the aftermath of the financial crisis, went to the public coffer as well. And I think if you add it all up, you get to something like a 3-digit billion. And I'm not talking about yuan, I'm talking about dollars that they earned on that. So it was a big source of income as well, especially as they took a lot of money also from foreign banks.
But for those three institutions, they will be able to either compensate their customers, or, Baocheng, do you think they have the capability to do so after the punishment or the fines?
Well, you never know how deep is their pocket. So therefore,
that's true.
And also how many liabilities they have been facing. So that's something that we cannot really make a wild guess.
Right. We'll wait and see. But to what extent could this hit liquidity in Hong Kong stocks or U.S.-listed Chinese companies and overseas assets popular with mainland investors? Jiahe?
Well, we have actually seen that Hong Kong market has been falling quite significantly since this news actually came out. So people say this has been priced in. Well, the question is that the selling in recent trading days, how much is that really caused by the selling of these few companies, and how much are causing by other factors such as worrying? Maybe, well, quite many people quoting that the tech stocks in the United States is too expensive at the moment, and the correction might trigger some bad performance in Hong Kong market. And how much is causing by these kind of impacts? We don't know yet, because the market is a very complicated place. You have all sorts of reasons to play in, and the selling of these securities clients is also a reason. But it's just really hard for you to figure out how much is actually caused by this, because there are many possibilities. For example, when people are really loving the stocks of, for example, if they hold a certain stock in one of these brokers, and you really love these stocks, and you think, well, I'm going to hold it for 10 years. Like when I'm buying companies, I usually say I love this company and I would hold it for 5 or 10 years until I find another more attractive target. If you do that, then when you sell the stock, what it would do is that it will buy it back from another broker, or you can buy it back from the Shanghai and Shenzhen to Hong Kong connection program. You won't just let it go. Like I'm actually moving one of my personal security account in mainland these days, and when I can't do purchases in this account for just a few days when you're moving, it's a regulation, I would do the purchasing in other accounts. So basically, how much this will really trigger the sale, because if people really love the stock, they sell in this broker, they can buy it back from other channels. There are so many channels around. They can use the RMB to buy the Hong Kong stocks through the Shanghai and Hong Kong connection program or Shenzhen Hong Kong connection program. So it's really hard question to answer, but people always consider this kind of thing to be negative. Of course, you don't find too much positive stimulation from this event.
Maybe let me say something else as well.
Right.
We shouldn't treat stocks and other financial types like shoes. There's a limited number of shoes you can buy them, you can sell them. In well-developed markets, if there's a stock you want to buy, you can buy it. And if there's an arbitrage relationship on these markets, and if there are derivatives, there are short sales and everything, all these products might lead to that you can buy even more stocks than there were exactly on this market at that time. So these effects shouldn't be very big. If you look at developed market and large shares, you see that something like 40%, 30% of the shares that are traded second time. They come from short transactions. And so the liquidity of the markets in this respect, if they're well developed, is very, very strong. And I don't think that this special development will have a big impact, especially on the US market.
All right. Baocheng, do you see it the same way?
Yeah, I do agree, because the stock market in Hong Kong has been very sophisticated. They are able to absorb some of the shocks, but they are also very much watchful about the larger impact. Is that if the Chinese mainland regulators continue with such sort of the restrictive practices, what would that really indicate for the future of financial flow? And of course, many of those distributional network are also getting concerned about how they can raise more money. So therefore, they would really now reading the clear signal, and also I think they tap into more of the future actions that Chinese mainland regulators might also take. But the appetite for such sort of a low cost, the digital-based operation from mainland is still very strong, and how they can really even negotiate for a sort of legitimate channel with the mainland regulators, that's also something that they can really consider.
And about another maybe target, you all mentioned that the authorities are doing this. One of the reasons is to keep money at home, right? It will prevent capital outflow. But to what extent could this crackdown actually help reach that goal, Baocheng?
Well, we normally say that you can lead a horse to water, but you can hardly make it a drink. And so, therefore, yes, we encourage you to spend the money for consumption to boost the contribution on the service sector or electronic sector. But are people willing to do that? And the other is that if the Chinese IPO companies, if they cannot really eventually deliver the right type of performance in their revenue and profit earning, and they will not really give more confidence to those who have their money in their pocket. So they may really find many other ways to diversify into other type of investment, like buying fixed assets or invest into some of the startup companies, or simply keep it at a very low interest with a bank, or lend it to a trusted friend, etc. Therefore, ultimately, it is really the confidence that can be delivered by the right economic performance, and also by those companies who can offer productivity and profitability that can really attract them here. And the other issue is that given the large interest rate gap between mainland China versus many other regions, and also given the expectation that China is going to further lower its interest, so those money spillover will be handled, in a more rational way, at least for those individual investors. So that will be a crowd-out effect. in that sense.
All right. There's always two sides to a coin, right? Some analysts are saying those online brokerages became so successful because they offered lower fees, smoother user experiences, and broader access to global assets than traditional firms. So this crackdown, yes, it might prevent some capital outflow, but on the other hand, could this crackdown slow like innovation in China's brokerage industry or reduce the pressure on traditional brokerages to modernize themselves? Hans-Peter?
Well, I think that it will already do this. It makes it more dangerous for people who are innovative in this market, so they will be more careful, and that means they will be less innovative. But that's always a trade-off. On the other end, you have laws, and laws must be adhered to. Otherwise, it doesn't make any sense to have any laws. So this has already happened, I'm sure. Yeah. So this effect of less innovation, more cautious policies, this impact will be there. I'm not sure if the regulators are aware of that. Putting away pressure from the local companies doing business just inside China certainly is not a driver to innovation, because then they can be more lazy, they can be lazier, they can be less innovative, they can deliver worse products and still make money. And for sure, competition is a driver of innovation, of efficiency. And this effect is lessened by such a measure for sure.
Okay, Jiahe, your take here?
Well, I would say this is not a big concern. The first thing is that these internet companies are not doing something that other securities companies cannot do. Because I've been working in China's securities company for, I think it's about 11 years. I worked in some other asset management companies. But my career in the securities companies has been about 11 years. I would say all the businesses that these companies are actually offering can also be offered by traditional securities companies. They are not giving you something special that people have never seen before. If you come over to China, you trade the stock right now with all the traditional securities companies, is that you get the brokerage fee as low as 1 basis point, which is 0.01%, which is a very low rate offered by China's traditional securities companies. And everything is actually online. You don't really have to go to the offline stores at all. So these companies are basically not doing something that others are not, they're not doing something that no one can do. They're just offering same kind of business. The second is that the financial industry is really a place where regulation is more important than efficiency. I mean, look at what has been done back in 2008 when we had the global financial crisis. All the 5 large securities companies in the United States were melted down over just a few months' time. That's the time that when you put efficiency ahead of regulation. So finance is something different, because if we look at many industries, efficiency is the most important thing. The regulation is not that important. You have to build the better products. But finance is a place where efficiency is less important compared with security, regulation, and stability. So this is a very different industry.
All right.
On that front, I choose to disagree with Jiahe. One is that you can say that there are food offered by those 5-star hotels, and you do not need to run a restaurant nearby. So therefore, competition, by those young companies can really offer people's choice, more of the variety. And the other is that yes, the efficiency versus security is really a balance, but the situation that broke out in 2008 in the United States is totally different than what is going on within China for such a regulation, because the legislative objective will be different, where the lack of regulation, oversight for doing the fair and free business was much a problem for the global financial crisis. But within China, it is really more of the containment. That's the major consideration with regard to financial outflow. So that's the difference.
All right. Maybe we haven't reached the balance point yet, right?
Yeah, because they are not really targeting those who are really creating Ponzi scheme or other type of behaviors. That's the issue of the lack of license is really a technical error.
Which means
this might also point to a certain problem we have in here. The more we crack down on activities which are not legal at the actual state of law, but could be legal and could work properly without endangering stability of the financial system, we might push capital into a more even illegal path of And there we might have sharks running around and Ponzi schemes and fake investment funds and all these things. And that's one of the problems. If we throw out reliable market participants, which do this business in a way that leads to fair situation for the clients, we leave some clients to the sharks in the internet. And that's a dangerous thing to do.
Right. But no matter whether we are creative enough, there is this impression brought about by this crackdown is that some investors are now asking whether China's financial liberation is moving into reverse. So how serious is that concern then, Hans-Peter?
From the outside, I have this concern when I read this news, but I think we need an inside view on that because from Europe, you cannot really see what happens in Chinese politics and where it goes to.
I think now, yes, we can really tighten those, violations either strategically or technically, but in the meantime, we also need to send a more positive message. It is China is gradually liberalizing this and encourage innovation, but put them into the realm of the legality and the legitimacy. Therefore, it is not only sending a signal to chill the spine, but rather also tell a very positive message that, okay, we tighten the regulation just to protect more of those investors and also give people more choices in a more legitimate way. I think that's the balanced approach.
But when commenting on the move, Chinese regulators have said supervision must become sharp-toothed and thorny. Well, does this signal China's capital markets are entering a new era of normalized strong regulation, which could be some other concern for some people, right, Baocheng?
Yeah, well, we do not know how to define the length of what you mentioned as the tightening era, but at least it is really something moving into a more of heavy-handed regulation. Many of them, I should say, has high legitimacy, and also it is also crucial time for doing that. But now within the Chinese marketplace, where the focus needs really to be also on liberalizing more of the new areas for private companies to really to participate, particularly in those competitive sectors, and also by having the good economic performance, and people will vote with their feet as where they can really invest. So the trajectory of such sort of tightening is a more precautionary type of approach that's to be there responding to the Chinese dual circulation strategy, where the domestic circulation becomes the mainstay. Now we still need a more of a calibrated, rule-based liberalization process, which can really further lead China for real high-quality growth with more of the robustness and vitality.
How concerning is that? Does that sound to you, Hans-Peter?
I think that's good strategy. I think one could combine this with positive signals with regard to rule-based development. And a strong regulator as such is a good thing to have in the financial markets. I'm not sure if these companies are the right target in this respect, because I never read anywhere that the investors were a danger in these companies. So there's nothing to do with Ponzi schemes or something like that, as far as I understood. But for sure, such signals would be helpful, because otherwise you get into an imbalance and get the wrong political idea about what you intend to do. Like, as I told you, the simple idea of saying we want to keep the capital within the country. I think that's not a good signal to make if you believe that a free market economy is the most efficient way to foster investment and foster development of the country.
Then what could regulators target next? That's coming up right after the break. Stay with us.
From north to south, east to west, people in China are chasing their dreams and leaving their mark. Want to know how they beat the odds and made a difference? Footprints brings you the true life stories of their journeys.
Welcome back to the Chat Lounge. We continue our chat on China's latest move to tighten its crackdown on illegal cross-border brokerage activities. What could regulators target next? Maybe this question goes to Jiahe or Baocheng.
Okay. What I just want to make one small concern before, comment,
All right.
before answering the question,
Sure.
saying that, what more regulations would be done, is that this latest action is not actually forcing people to leave their money in China. It's basically a conducting of what has been stated in the securities law very clearly, that if you do something, you have to apply for a license, and they didn't do that. Actually, quite a few friends of mine who has been opening their accounts in these securities companies, they are not talking about when they sell the stocks, where should their money go. They are not forced to get their money back to China at all. It's their money, it's their choice. The country is really not saying that, okay, when you sold your stocks in these brokers, you have to get it back China. And I never heard anything like that. It's not legal. You just basically can't do that in China if you are someone from the government. And regarding where the securities regulation will be conducted in the next period, what I would say is that if you check out China's, growing up and China's building of our securities market, what we have got is that we kept on having more regulations and more laws, more enforcements, everything, because China has got a securities market only since the early of 1990s. So we got this market for about 36 years. And if you look at United States, Wall Street, they have been there for 200 years, something like that. I'm not very exact about this, but they got hundreds of years. They got hundreds of years of securities market in London, in Paris, everywhere around the world. But China is very new. So we are basically writing more and more securities laws. Many of the rules are actually copying the experience from matured markets, and we kept on enforcing these laws alongside the road. So we have seen more and more regulations being conducted in recent years. We have seen much more penalties being given out to many illegal activities, which were either out of the penalty from the government, or they get very small amount of penalties. But in recent years, we see a huge amount of penalty coming out. People can get fined by tens of millions or hundreds of millions of yuan if they broke the law. So this is something that China has kept on doing. This is a developing economy, and you see this kind of things coming out from year to year.
Well, to me, I'm not really opposing such a specific measure to have a tougher regulation over this type of practice. But overall, I would see that regulators need of their own regulation. One is that the different ministries, different government agencies, financial sector, commerce sector, the industry sector, information sector, they need far better coordination in addressing the root cause of many of those issues. The key is really to continue to deepen the Chinese reform so that companies can really be placed on an equal footing in their competition, and have equal access to the sectors that are being restricted. And then they also need higher level of transparency and accountability in making the law. And that also requires them to have a significant foresight. So the learning process, as Jiahe has mentioned, as impact can be created by certain type of regulation. So instead of doing a campaign type of approach, they need a more streamlined, coherent, and the future-oriented strategy so that they can really produce rules and laws that can be more predictable by all business players.
Right. Someone has also argued this crackdown exposes the limitations of existing channels like a Stock Connect and the Cross-Border Wealth Management Connect scheme. Anything can be done there or needs to be done there, Jiahe?
Well, actually, a huge amount of businesses have been conducted to connect China's mainland stock market with the global market. If you look at the development of these markets, you know what I mean. For example, the connection program between mainland and Hong Kong has been, strongly stimulated over the past few years. You can now basically buy A-share companies with any amount if you are having your money in the world. I mean, going through the channel of Hong Kong market, you can just come into mainland market as much as you like. And if you are, having your money in mainland, you can just go to Hong Kong market at any time you like. Actually, I have about 40% of my personal money investing in Hong Kong stocks. Well, I have actually said to my friends quite a long while ago, why should you open an account with these online securities brokers because I did quite a lot of legal work when I was in securities companies. I know that their activities were illegal. So it's just a matter of time about when the final law judgment will be upon them. And it was a very interesting thing. But nowadays, if you are an investor in mainland and you want to invest in companies in Hong Kong, it's very easy for you. And if you want to invest in companies in United States or Europe, you can also do that as long as you are, the small retail investors with only tens of thousands of yuan, basically they can't do that. And I think it's a good thing for them not to do that because they are not well informed enough to compete against investors in Wall Street. They just basically can't do that. But if you got enough money, say you're having someone with tens of millions or hundreds of millions, you can invest in United stocks by going to the securities companies, asking them to do a kind of service that's called I think it's called something profit exchange or something. So if you sign an agreement with the security service in China, you can invest in US stocks. So all these channels have actually been built up in the past few years.
So here's
I think Jiahe has really brought a very important point that requires a better market education,
right.
Because not many people, I should say only a few number of people are really professionals like Mr. Jiahe. So.
All right. What's the most important message Beijing is trying to send through this crackdown? Is it simply a tough enforcement action against a few online brokerages, or does it signal a much broader shift in China's financial regulation philosophy or capital flow governance and financial security strategy? Hans-Peter, from your perspective, what do you say?
I think that it has not been really seen as such a big signal outside China.
All right.
So I think it's not threatening to lead to a total different view of China in the sense that China will now be very, very very much regulating these markets and stopping all development here. When I read a little bit closer about it, some who are close to the Chinese market, however, saw such a signal. That's why I said we need somehow interpretation of such a signal, telling us what does it mean. Because as I said, there's two positions. You must adhere to the law if you play on capital markets. I mean, that's why we have a law. And in no country around the globe, you're allowed to do such financial business without having, no, I wouldn't say, but in almost any country around the globe, you're not allowed to do such a business without a license. So that's naturally the case that this license requisite is enforced. On the other hand, sometimes the law follows the actual economic case, and that in a dynamic situation, that's maybe not a bad thing to see what works. As I told you, sandbox, let's try what could be possible. And then we try to adjust the law to the respective development, and that's a good thing. And some of the laws China is enforcing now, creating now, come from international agreements. Many of them come from international agreements. And maybe China could play also a positive role in that by maybe stopping this trend of over-regulation. Because if you have too many rules, that first a very strong reduction of economic freedom and economic efficiency on the one hand. On the other hand, what my personal experience coming from a highly regulated system is that a state that has too much rules is no longer able to enforce these rules in a meaningful sense. Because somehow you're just a labyrinthum of rules and you try to enforce all of them, some of them even are contradicting themselves. And if, as my colleague just said, you've got many different state agencies working on this field, it might be even get more chaotic even. And in the end, you don't get neither efficiency nor stability. And that's a dangerous point. And I think in the international development of regulation, we work into this direction and maybe should cut down on a regulation that follows clear economic objectives with regard to stability. And if China could play a positive role on the international scene in this respect, this would be a very good signal for me.
Yeah, I understand the message can be delivered in three folds by this action. One is that the offshore fintech innovation can be acceptable only within clearly defined regulator parameters. And two, the cross-border fintech services must be explicitly licensed, not really being placed in the gray zone anymore. So the three is that the enforcement will increasingly be more on an interagency or sustained structural basis rather than make it episodic. So I think in a nutshell, it really signals a shift from a selective enforcement or ad hoc enforcement to a more systematic regulatory closure of those gray zones dealing with cross-border brokerage channels.
Right, fair enough. And the last question to Jiahe. I think the most immediate or direct, I should say, beneficiary of the authorities' move is investment agencies like yours, right? Who are always doing business in line with the rules or the law. Then, as a market player, anything you want to say to or suggestions you want to make to the authorities in this regard then, regarding their future direction?
Well, I have actually been thinking for quite a long while since I entered this program, and we kept on asking this question: why now? Okay, why now? Are we sending a signal? Are we doing this or that? Because from a person who have been working in the securities company for over 10 years, and I spent about half year managing the legal issues of my research departments, I know exactly that they have been breaking the law. So it's always a question about when they will get the penalty rather than whether they should get the penalty, whether this should be stopped, because it's something illegal. And in finance, if you are doing something illegal, you should get some penalty. Okay, that's a very basic rule. So the question of why now has been asked closer to me in this program, because I never thought it before. I thought it just have to be done. So why now? Well, I think that there is one possible reason is that because if you are someone working in the government authorities, in the regulatory authorities, you know that by stopping this activity will force people to sell their stocks because they can't hold stocks in these companies anymore, according to the statement. So should you do that in the time? And if you look at these investors, they're actually investing, some of them invest in Hong Kong market, but many of them are investing in the United States. So in order to reduce the damage to the smallest extent, should you do this in the time of a bear market or bull market? You do that in a bull market, because when people sell off in a bull market, they get their money, they get their profit, they take it away, and then that's it. But if you do that in a bear market where you have very low PE ratio, where the time that people like Warren Buffett are buying, and you force these people to sell because this penalty, which should be done anyway, it's not a good choice. So if you put this into consideration, the US market is in a super bull market right now. Look at what Warren Buffett has been doing. He has been stealing about $400 billion of cash. He's not holding these stocks. So if you look at this and you think about why now, what signal? It's probably not a signal, but it's probably, well, I don't have any concrete evidence to support my sign, but I think it's, well, one possible reason is that by putting this penalty out at this time and asking these people to sell their stocks, it's a good time to protect them, because it's a super bull market in the United States where Warren Buffett is storing this huge amount of cash. So I think that's a potential reason. I don't know. It's really a wild guess. I don't have any evidence to support this, but it's my guessing. So if this is so, you ask me to say something to the authorities, I would say good job. I mean, good timing.
Right. They got your endorsement. Any hope for them, or the next, maybe next step they should take, or just to further stabilize or support the market?
Well, I have been working in this market ever since 2006. I've been here for 20 years. What I see is that, well, if you ask me, is this market perfect? Is everything conducted perfectly? It's not. I mean, you have problems everywhere. I mean, even if you go to London, you go to New York, where the capital market has been running for hundreds of years, you kept on having problems. It's a huge amount of problems that you can't fix. But if you ask me to compare what we're having right now in China compared with 20 years ago when I first time entered into the office of Ping An Asset Management, where we were managing about, I think it's about hundreds of billions of yuan back then. I've been working here for 20 years. I see huge amount of improvement compared with 20 years ago. And when I talk to people who worked in 1990s, I see a huge amount of improvement from the time I entered into business compared with 15 years before that. So you keep on seeing improvements with all these kind of regulations, laws, the ways that they discover the problems in the market, the fraud, all these kind of things. They give out penalties and anti-corruption, all sorts of things. I mean, it's a huge amount of work conducted. Well, this is also the reason behind the growing of China's economy in the past few decades, that you see we received this huge amount of economic progress over half a century's time. So yeah, I mean, we keep on doing this in the future.
All right, on that note, we conclude our chat for this session. Many thanks to Chen Jiahe with Beijing-based Novem Arcae Technologies, Professor Liu Baocheng from the University of International Business and Economics, and Professor Hans-Peter Burghof from the University of Hohenheim for your time and insights. We'd love to hear your thoughts, so drop us a line at radio@cgtn.com. I'm Tuyun. Thank you for listening. Join us again next week on the Chat Lounge. Till then, take care and talk soon.
He can't live without the yellow river in his eyes.
Both my grandpa and dad made a living from the river. The Yellow River Mosaic is a 12-part series of multimedia stories featuring the people who live by the river and share a close bond with it. Subscribe the Yellow River Mosaic on your favorite podcast platform or visit radio.cgtn.com for more in this program.